How long does a short-term rental agreement last? If you are curious about the duration of a short-term rental agreement, you are in the right place. Understanding how long these agreements last is essential for anyone involved in real estate investing or property management. Short-term rental agreements typically last for any rental period shorter than 1 year. Most often, these agreements cover stays of just a few days up to 6 months. In fact, many short-term rentals are designed for stays of less than 30 days. This is especially common for vacation rentals or properties listed on platforms like Airbnb. In some situations, short-term rental agreements can extend up to 6 months. This is particularly true for furnished rentals that cater to tenants needing temporary housing. The specific duration of these agreements can vary based on local laws and market practices. For example, some cities define short-term rentals as those lasting less than 30 days, while others may consider anything under 6 months as short-term. From the perspective of real estate investing, short-term rental agreements offer flexibility and the potential for higher rental income. These agreements allow property owners to accommodate multiple tenants throughout the year. This is a significant difference compared to traditional long-term leases, which usually last 1 year or longer. Mid-term rentals, which last between 1 and 6 months, serve as a hybrid option. They provide more consistent income than very short stays while still offering more flexibility than long-term leases. When considering short-term rentals, there are key points to keep in mind. The typical duration ranges from a few days to 6 months, with many agreements focusing on stays of 30 days or less. Legal definitions can vary by location, so it is essential to be aware of local regulations. Another important aspect is tax implications. Rental income from stays longer than 14 consecutive days may be subject to income taxes, which is something investors should consider. Short-term agreements allow real estate investors to maximize income through higher nightly rates and frequent tenant turnover. However, they may also require more active management and higher maintenance costs. Short-term rentals attract a variety of tenants, including travelers, vacationers, and individuals needing temporary housing. Mid-term rentals often appeal to traveling professionals or students seeking a place to stay for a few months. In summary, short-term rental agreements generally last from a few days to under 6 months, with the most common cutoff being 30 days or less. Real estate investors use these agreements to take advantage of flexible rental markets and potentially higher returns compared to long-term leases. The exact length and terms depend on local regulations and investment goals.